Hello and welcome. We are at the 48th annual meeting of the Asian Development Bank in Azerbaijan in Baku. Today I am joined by Pier Carlo Padoan, who is the Finance Minister of Italy. Thank you very much for joining us.
My pleasure.
So first off, I would like to ask you a bit about Italy's relationship with some of the countries in Asia, because clearly you're here in Baku to attend the ADB meeting. So since many of the trading partners for Italy, most of them are in the EU, the top ones, whereas in Asia, the countries are experiencing faster growth. So are there new collaborations coming together, maybe on the back of your visit here?
Collaboration between Italian companies and Asian economies is growing strongly, including in the country we are today, Azerbaijan, in many sectors, including transport, infrastructure, but also manufacturing, chemicals, and so forth. So this is a very welcome development. We have just concluded an agreement. The government has just approved the final segment of a pipeline which will link Azerbaijan with Europe. And so this is a tangible sign of collaboration. We also look to develop further collaboration with the involvement of the Fondo Strategico Italiano, which is an investment fund participated by Cassa Depositi e Prestiti.
Perfect. And when we look at the banking sector in Italy, clearly it's been a tough time, a tough few years for the banking sector. Last year, 9 Italian banks failed the stress tests. The NPL problem, many analysts argue it's becoming bigger and bigger. But finally this year, quite an overdue law in terms of banking consolidation was passed. So 10 of the largest cooperative banks will become joint stock banks in the next 18 months, which is positive. But since banking consolidation remains quite a politically sensitive issue in Italy, what kind of pace of consolidation will we be expecting? And how far longer will we have to wait to have more of a sector-wide consolidation?
We are already seeing important elements of decisions of cooperative banks to merge among themselves with other partners. And this, to me, is the sign that the time was ripe for the law to be introduced. And this has sparked exactly what we were expecting: more competition, stronger banks, stronger balance sheets, more capital. So this is very good news. But we're not stopping there. We have already introduced another measure, an agreement between the Ministry of Finance and the so-called fondazioni, which will eliminate participation of fondazioni in the bank's shareholdings, and so this will free up resources for Fondazioni to invest in other sectors and will increase competition in the banks. Last but not least, the small cooperative banks, which were not covered by the cooperative law, are self-reforming. They have understood that it also for them a question of getting bigger and smaller in number so that they can merge. And they're asking for the government's support to identify a legal framework to do that. And of course, we are willing very much to support them. So this is an overall change in the Italian banking system. As far as non-performing loans is concerned, we are fully aware of the issue. We are working actively with the European Commission to identify instruments and ways that through which the government can help get rid of non-performing loans in full compliance with state aid regulation, which is an important element of the game. So we will introduce some elements which will facilitate, for instance, litigation and dischargement of NPLs soon. And this, in our view, will help kickstart a market for NPLs in the economy, which is already showing some signs of life.
Perfect. And when we start looking at Italy in a more macroeconomic sense, there's been good news so far for 2015. The expectation for GDP growth is 0.7%. And a few days ago, you said Italy is out of the recession, which is great news. Some of the issues that are still very problematic is the unemployment rate. So youth unemployment is at around 43%. There was a World Economic Forum statistic that put Italy right at the bottom of a list of countries in terms of labor market efficiency. We were, I think, 141st out of 144. But finally, the Jobs Act tries to address these issues in terms of red tapes, etc. But would you agree that if the wider goal is to increase total factor productivity in Italy ultimately, do you think that because productivity is so strongly correlated with institutional inefficiencies, unless these institutional inefficiencies such as corruption, poor accountability, poor monitoring and regulation, unless these things change, Jobs Act can't really fulfill all of its potential?
I fully agree that we need a basket of reforms. This is exactly what we're doing. In addition to the Jobs Act, which is changing dramatically the way labor markets operate, we are pushing forward public administration reform. We're pushing forward civil justice reform, which will dramatically cut the time of trials in administrative law. We are also, as you mentioned, introduce a major reform in the banking sector, and we are completing the delegated law for tax administration, which will improve transparency, certainty of the law as far as tax law is concerned. And all of these things together with other measures aimed at supporting non-banking lending by non-bank intermediaries will help boost private investment, which is what we ultimately need to create jobs and to grow more.
Perfect. Well, thank you so much for your time. Hopefully this year will be a year to turn around for Italy. Thank you.
Thank you very much.